Today, the EU gives final sign-off on comprehensive crypto regulation. Research from the Fed finds that some crypto whales were behind 2022's crypto runs. And Sam Callahan of Swan Bitcoin breaks down Bitcoin's performance this year. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices are in the red today, still seeing increased volatility driven by low liquidity. As of noon Eastern, Bitcoin was still floating around $27,000. Ether was down at around $1,800, and Solana fell nearly 3%. Okay, let's talk about the top stories. First, the European Union just gave final sign-off on MiCA, the comprehensive list of crypto rules for the region. EU finance ministers today approved the rules, which were passed by the European Parliament last month. The finance minister for Sweden told Reuters that recent events, quote, confirmed the urgent need for imposing rules which will protect Europeans who have invested in these assets. The finalized rules also put pressure on the U.S. to catch up on crypto rulemaking as companies ramp up their battles with the SEC over lack of regulatory clarity. Next, a new study from the Fed places some of the blame for 2022's crypto crash on institutional investors. According to research from the Federal Reserve Bank of Chicago, the runs faced last year by many now-failed crypto platforms were spearheaded by customers with large holdings, including institutional investors. The Chicago Fed pointed to Celsius in one example, where accounts with more than $500,000 were the fastest to see funds withdrawn. What's more, the study estimated that 35% of all withdrawals from Celsius during its run were made from accounts with $1 million or more. Overall, the Fed took a look at the collapses of Celsius, FTX, Voyager Digital, and more. Finally, Jump Trading reportedly entered a secret deal to prop up Terra USD a year before the coin's collapse. In its complaint against Terraform Labs and the firm's co-founder, Do Kwon, the SEC previously revealed that an unnamed third-party trading partner greatly profited from saving the Terra stablecoin from collapse. Citing court documents filed by the SEC on Friday, the Wall Street Journal reported that Jump was the unnamed U.S. trading firm mentioned in the agency's lawsuit and that the firm made about $1 billion in profit through its dealings with Terraform Labs. The Journal also reported that Jump hasn't been accused of any wrongdoing in connection with Terra USD or the coin's May 2022 collapse. An SEC spokesperson declined to comment beyond the public filing. We reached out to Jump Trading as well, but did not hear back right away. All right, on to our main story. Bitcoin might be down today, but the cryptocurrency is still up more than 60% so far this year. But can that momentum last? I spoke to Sam Callahan, lead analyst at Swan Bitcoin, to find out. Give me sort of the lay of the land right now with Bitcoin. You know, liquidity is low and volatility is a little bit higher than it was to start the year. But, you know, overall, we're still up pretty big this year when it comes to Bitcoin. What is driving the price action right now?
Yeah, to me, there's a lot of different factors that are driving Bitcoin's recent price performance in 2023. It's basically three things in my mind. First off, the economy has remained more robust than many market participants expected in Q1 and Q2. When you look at, say, earnings, 78% of S&P 500 companies beat earning estimates in Q1, which shocked a lot of investors. You have housing that has remained robust despite the increase in interest rates. You have inflation data coming down month over month. And that has all benefited Bitcoin and other risk assets. And many economic, in terms of secondly, Bitcoin sold off heavily compared to other asset classes in 2022 due to more endogenous factors, due to bad actors like FTX, Celsius. There's a lot of fear in the market. Whenever you see heavy selling, Bitcoin historically bounces really strongly off bottoms like that. So I think we're kind of seeing that in the price action to start 2023. And then thirdly, these recent bank failures. I mean, we have the second, third, fourth largest bank failures in history happened over the last couple of months. And that just proves Bitcoin's value proposition. Many investors are understanding this risk now, that there is counterparty risk when you hold your money at banks. 48% of Americans are now worried about their money due to a recent Gallup poll. And so many investors are looking at Bitcoin and understanding, hey, this thing doesn't have counterparty risk. I can be my own bank. I don't have to trust a bank. And so I think all three of those things, that the economy was more robust in Q1, Bitcoin was heavily in oversold territory coming out of 2022, and then the recent bank failures have helped buoy Bitcoin's price.
There's been a lot of talk that inflation is easing and a lot of debate that we could see rate cuts from the Fed by the end of this year. This is something that Paul Tudor Jones came on our air and talked about yesterday. How does the inflation narrative right now fit into the Bitcoin narrative, and what if anything, does that have to do with Bitcoin's performance in the near to medium term?
Yeah, I think inflation is coming down year over year, month after month that we've seen to start the year, and with Bitcoin, really it comes back to the Federal Reserve. Many are expecting a Fed pause now that the inflation data is coming down, and obviously that helps other assets when you think about the risk premiums. So stocks will benefit, and Bitcoin will benefit if the Fed stops raising interest rates. And then when it comes to inflation, I think when people look at Bitcoin, they say, oh, it didn't perform well as an inflation hedge. But they really got to think of the timing and how Bitcoin is a leading indicator and CPI is a lagging indicator. And so when you look at how Bitcoin has performed, really it sniffed out the inflation early on, and it performed really, really well coming out of 2020. And now with inflation starting to come down, they're expecting the Fed to kind of pause on those interest rate hikes, which could also be good for Bitcoin in that scenario as well. So I think Bitcoin performed well as an inflation hedge, and right now it's going to benefit from the Fed kind of pausing on these rate hikes with these other risk asset prices.
Let's talk a little bit about liquidity. That has been a growing theme in the crypto market this year. We keep hearing about market makers, most recently like Jump Crypto and Jane Street, pulling out of the crypto business in the U.S. The U.S. regulatory crackdown on the crypto industry is another dark cloud that's kind of hanging over the market. So institutional investors, we hear are still sort of taking a back seat. Is that stifling to Bitcoin, and to what extent? And, how do you turn the tide? Is this something that could linger until regulation here in the US gets figured out a little bit more, gets a little bit more clarity?
Yeah, when you look at market liquidity in Bitcoin and the broader crypto space, it really hasn't recovered since pre-FTX. And now we saw the shutdown of things like Signature's Signet, as well as Silvergate's similar platform. And now we have Jump kind of removing themselves. But that is more like the broader cryptocurrency market. We still have major players in the game that are going to step up and take advantage of the opportunity to provide the liquidity. But right now, as the kind of transition happens, I think it's important to expect more volatility in this market that doesn't have as much liquidity right now. And that's kind of what we're seeing, both on the upwards price action, as well as some of the downwards that we're seeing in recent weeks. But we should just kind of expect that to continue. But I think more institutional players will step up to the plate and look at this as an opportunity to take market share in this burgeoning industry.
Well, rather than talking about price by the end of the year, I want to talk to you about sentiment. So where do you see institutions and retail investors' feelings towards Bitcoin by the end of this year? And, how resilient is it? How reliant is it on the U.S. avoiding the so-called hard landing or the recession that everyone is kind of looking out for?
Yeah, I think Bitcoin has proved really resilient to start 2023. I mean, like I said, we've gone through a banking crisis, and I think that it actually benefits from chaos. I mean, this is an alternative monetary system that's supposed to kind of help investors hedge themselves against the risks associated with the traditional banking system. And so through this turmoil that we've recently seen, we've seen Bitcoin explode in price, and I don't think that's a coincidence. And so when we look forward to Q3, Q4, I think there are a confluence of factors when you think about the hard landing, and if we see kind of a deterioration in corporate profits in this next earnings season, if we see slowing economic growth, if we see tightening lending standards, I think there could be a scenario where there's a correlation to one event and all asset prices fall. But Bitcoin's value proposition remains unique. And it's an asset that is a bearer asset that doesn't have counterparty risk, that really benefits from, like I said, fragility in the traditional financial system. And so that's why it's unique compared to other asset classes. And I think that's why it belongs in every diversified portfolio to hedge against those risks.
Okay, that's all for Crypto World today, but we'll be back again tomorrow. We'll see you then.